Hello and welcome to another update video about Ethereum. So Ethereum, we have a similar situation as on the Bitcoin chart, where here a couple of days ago, early yesterday, depending on which time zone you were in, we had here quite a bit of an impulsive rally in a wave one. Okay. So what we're doing here, we try to find out if indeed the low here at $880 was already the end of the overall correction here on the Ethereum chart, which, if we zoom out to the daily chart, would mean that here we had a wave one to the upside. In May 21, we came down in a wave A, we moved up in an overshooting wave B. We are now coming down in a wave C. That wave C might have been finished. The wave A, B, C, that structure is part of a wave two. That wave two here would finish off the correction. Now that could already be complete, and that is what we're trying to investigate. Or if we have to count this whole move down differently, and there will be another retracement to the upside and another impulse down, which means we have not yet seen the lowest low and that there will be another lower low. This is what we currently try to establish, and for Ethereum we can make the case that the low could be in. But again, as I said in the last few videos as well, in the last couple of weeks pretty much, since we've hit the low here on the 18th of June, it is way too early to confirm that. That is why we try to look for evidence and support for the case that we could be in a breakout scenario. But for now, until we break structurally very important levels, we still have to have on the radar that the downside potential is still very real. And we actually, because we have not yet taken any structurally important levels out, which would be this resistance area here between 1255 and 1280, we have to remain focused on the downside. Okay, so if we take a look at that from a bearish point of view, we have to understand there could be another move down, and this could be the last wave down then, in which we already are, that we started since the high here at 1280 pretty much, that we are working now on an impulsive move to the downside that would take us below $880. And the very realistic level, if we indeed make another lower low, would be that $615 level. That is the 88.7% Fibonacci retracement level. For now though, we are looking for evidence that the low could be in. But until we break that structurally important level between 1255 and 1280, we need to be focused also on the downside. So which levels need to be taken out to make the bearish scenario work? First of all, we have here some key levels that have to be taken out. So first of all, of course, the whole bullish scenario will be invalidated if we go below $880. Yeah, that would be a significant signal. That is the swing low. Should be clear that if we take that out, all of the uptrending potential that we have here on the chart is over. We can count from the low on the 18th of June. We can reasonably count all of this move to 1280 as a wave one. We have a 5-wave move in a leading diagonal. It's again, for everybody who's sort of familiar with Elliott Waves, there's always the question that wave 4 should not enter wave 1. It is possible in a leading diagonal, absolutely. It's actually common that a wave 4 cuts into the wave 1. So this is possible. Therefore, this is an absolutely valid count here in a wave 1. And we can then assume that we came down in an A, B, C pattern here with a new low, a higher low, here at $995. This can be counted as a 5-wave move down. Let me make note of the fact that the wave 5 of this 5-wave move was higher than the wave 3 low. This is possible in exceptional circumstances. It's a so-called truncated low arrangement. It is possible to do that if it is followed by a strong move to the upside, which in my opinion this move qualifies. So I have not a problem with counting this as a truncated low. This also is the level that we should not go below, ideally, in a bullish scenario, so the $1,000 level, because then what we can count here as a possible wave 1 and a wave 2 would be invalidated. Yeah, so the first spark to the upside that we had here since the swing low of that wave 5 at $1,000 would then be invalidated and cannot count anymore as wave 1 and 2 as part of a potential wave 3 to the upside here in blue. then this has been invalidated. So for now, yeah, we can reasonably believe that the low of the wave 2 might be in here, so that we've, as I said, from the low moved up in a wave 1 in a 5-wave move. We then came down in a 3-wave move, A, B, and C in a wave 2. And we might have started already that wave 3, which again will consist of 5 subwaves. And of those 5 subwaves, we might have already seen the wave 1 and the wave 2. Okay, so this is currently the view that we can follow, generally the thought. Okay, what will be happening or what must happen to now make the case or strengthen the case for further upside? First of all, we see here that the wave 2 yesterday, it looked like the wave 2 was already finished in an A, B, C. Didn't happen, broke the trend line to the downside. Made the channel members aware on Telegram, if that trend line breaks, that immediate uptrend is first of all over, and the target then is always here, the next support, which we did. So we could count this here currently as still as an A, B, C, yeah, still possible, where we might now have the low in for the wave 2. What we shouldn't do, as I said, is go below $1,000. And ideally, we also go up from here and would break that resistance at $1,079, $1,080. Then we'll move above the wave 1 high at 1,114 and then can move up in a wave 3. That next move to the upside in a bullish scenario should take us into the region around $1,220. Then there will be a wave 4 down and then a wave 5 up. That should take us here sort of into the region of that resistance area, yeah, maybe even higher. Maybe already that wave 3 will take us into that area. So this is sort of the thought at the moment, the bullish wave count and what needs to happen to hold basically the bullish case. You know? For now, we have evidence that, or initial evidence that the wave 2 here in blue might be finished, that we've started a move to the upside already, but for that the $1,000 level needs to hold. What happens if we go below $1,000? Would it be a disaster? No, it wouldn't be a disaster. In that case, we have to assume that wave 2 in blue hasn't been finished yet. We still have a little bit of space to the downside on the Ethereum chart. So it's still possible to hit the $962 level. That's the 78.6% FIB level in a wave 2 in blue. That would be live if we go below $1,000. Then we just have to assume that we are still here in this blue wave 2. And we could even go down to 921, even though here it will then get unlikely that it is still the bullish scenario. So for now, still at the moment, very, very early in a possible uptrend. If it is an uptrend, we need to be on high alert at the moment into both, that the moves could still happen in both directions. We do not have an established uptrend yet. We are actually still in this overall downtrend because we have not taken this resistance area out, and only when this happens we can be more optimistic to the upside. But we have some initial evidence that we could indeed be working here on a breakout. But yeah, gave you the key support, key resistance levels, and overall at the moment we still need to have it on the radar that here possibly this wave 4 was never finished, that this was actually here, that we're still in the wave 4, it's finished here and we go down in a wave 5. This is still very possible. We need to have it on the radar, and there is just a lot of uncertainty in the markets. We need to be aware of that, yeah. Because if you are in a possible trend change environment, and this is a possible trend change that is currently occurring, not yet confirmed, this will only be confirmed by having the evidence in the Elliott Wave patterns, which means we want to see a 5-wave move up and a 3-wave move down, and we want to have broken structurally important levels. Only when we have that confirmed, yeah, we can be more optimistic that we are changing the trend to the upside. As I always say, the low is not an event, it is the process, because we need, first of all, evidence, yeah, on the chart to call out the low. Everything else is just a guess. So yeah, again, difficult environment at the moment, uncertainty in the market, yeah, and you can see that in the charts. So we are going to follow this further, and you should now be aware of the key levels that should make both of or one of these scenarios more likely, the first one or the second one. Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.